if it were possible for the U.S. housing market to get weirder, it sure seems like it's happening. There are some unique measurements happening in the data this week, and we've never seen it like this before. Each week, Altos Research tracks every home for sale in the country. We analyze all the pricing, the supply and demand, all the changes in that data, so we make it available to you before you see it in the traditional channels. A traditional real estate data is released monthly, so by the time it gets to you, it's kind of old news. The news right now is that home prices are still surging and the effects of higher mortgage rates are not in the market yet. I'm Mike Simonsen. I am the CEO of Altos Research, and let's look at the data for the week of February 14th, 2022. Happy Valentine's Day. When we talk about surging home prices, this is what we're looking at. The price of the new listings, that's the homes that just hit the market, this week jumped to $389,900. The new listings price always surges this time of year as the best new inventory gets listed and the most buyers are gearing up for the spring home buying season. A surge in new list price is not unusual. What's wild is that the price of the new listings, that's the light red line here, has jumped for the first time above the price of the whole market, which is the dark red line. The median price of all single-family homes in the U.S. this week is $379,900. Astute watchers of the Altos data will notice that the price of the new listings is always less than the price of the market as a whole. It turns out that because of the velocity of sales at lower price points is faster, and so more listings and more sales happen at the lower price points. The more expensive homes tend to take longer to sell. So in any given week, the price of the newly listed cohort is less than the whole set on the market. It's kind of funny how the data works that way. As the market heats up, the price of the new listings spike. Sellers and listing agents know exactly where demand is, and they price their home a little higher to capture that demand. This week, for the first time ever in the 16 years of the Altos Research data set, the median price of the new listings is higher than the price of the whole set already on the market. That's because of a few reasons. We have low total inventory, and the expensive homes are selling fast too, almost as fast as the cheaper homes. And because we have this huge February demand, so new sellers are pricing up to capture that as quickly as possible. So pricing is always strong this time of year, but it's really, really strong right now. So this is something to watch in the coming weeks. If the price of the new listings stays elevated, that's going to be a very bullish sign for future transaction prices. This pricing is registering current levels of demand. These are buyers who locked their mortgage rates in December and January. But of course, simultaneously, mortgage rates have spiked their fastest ever in the first 7 weeks of the year. Ever recently. This is an awesome chart here from mortgage lender homebuyer.com. And you can see how quickly rates are climbing in 2022 versus recent history. The red line here at the top is 2022. So it's going to be fascinating to see if this jump is enough to put the brakes on the crazy hot demand. Rates up this fast mean buyers have lost about 5% of the affordable home price, according to Homebuyer. So for the same monthly mortgage payment. So assuming rates stay on this curve, we should start to see the market implications later in the year. We actually have reviewed these implications of rising rates and our forecast for inventory in last week's Altos Research webinar. The replay of that webinar is now available on our YouTube channel, and the details are on the Altos blog. If you're interested in how much inventory is likely to climb this year in the face of these rising rates, check out that webinar. We'll include a link in the description below here. When we look at active inventory, however, as of right now, we hit a new record low in available homes on the market. There are under 250,000 single-family homes on the market in the U.S. right now. There'll be another 70,000 or so that get listed this week. Even as rates rise, it's going to be really hard to get significantly more inventory. So you can see in this chart how low we are at our record low. In fact, the inventory number in recent weeks is declining more quickly than expected. The decline is due in part to new construction and the global supply chain challenges. New construction that is nearly complete would normally be counted in active inventory. These projects, however, are now being delayed because of the slow supply chains. Many of these homes are delayed all the way into, say, 2023. So especially in places like Texas, where a significant portion of the inventory is new construction, you can see this acutely. So the way we view it, if a home isn't going to be completed till next year, it's not actually active inventory right now. You can buy a property, but you can't live in it. So we remove them from this count of homes that you can buy today. Another reason that inventory continues to be restricted is because we have essentially no homes in the foreclosure pipeline. This week, across the U.S., we've hit a record few homes in any stage of mortgage delinquency. Record few people are facing foreclosure in this country. And because we have record levels of inventory and record cheap mortgages set over the last few years, and we have big employment numbers, and we have inflation. So record few homes are underwater, and therefore we will have essentially no distressed sales anytime soon, probably for the next few years to add to inventory. There are no short sales because nobody in the country is short. So even as rates rise, that really only impacts new buyers. So existing homeowners are locked into their record cheap mortgages. So rising rates will add to inventory, but not a ton. Anyway, check out the webinar from last week for the details on how we forecast that might work. We can see now why the price of the new listings is so strong when we look at the immediate sales tracker. About 30% of the homes that got listed for sale last week went into contract essentially immediately. As I mentioned, these are buyers who have been shopping. They've maybe been outbid on previous sales and are ready to act quickly now. They also see rising rates and they want to get their deal done before it gets more expensive. So the light red portion of the bar here, of each bar here, are the new listings that went into contract essentially immediately in the given week. Finally, this week, let's look at the leading indicator of price sensitivity that we'll want to keep our eye on as rates rise. So this is the price reductions, a percentage of homes on the market that have taken a price cut before they sell. In this chart here, we're showing the yearly curve, each of the last 6 or 7 years. There are always some price reductions. Right now, as you might expect, we're at record few price reductions for this time of year. Normally, a third of homes take a price cut before they sell. Right now, it's only 18% and falling. You can see the dark red curve here at the beginning of the year. You can also see how last fall, the light red line, the market tried to normalize a bit before actually accelerating in December. So if consumers feel the pinch of higher mortgage rates, we may see the price reductions claw their way back to almost normal here. We're a long way from anything scary, any bad news, of course, in this market. But this is a place where we will see how quickly consumers are reacting to higher mortgage rates. Okay, that's all the data we have time for this week. To get your local data for your buyers and sellers, go to altosresearch.com and join us. You can get your market data into your clients' hands today. It's that easy. Because everybody needs to know what's happening in this crazy market. And the market's changing fast right now. It's your opportunity to help people succeed. Also, this week we have a new Top of Mind podcast that will be available Wednesday. And last week's webinar, as I mentioned, is available on the YouTube channel. So go check that out. So much great stuff for you. I appreciate you being with us. More next week.